Bitcoin, the king of crypto, still has massive potential. What if I told you that one of the most controversial financial inventions in modern history was once considered worthless, fake, and even a scam by many experts, but today it has become one of the most powerful alternative assets in the world? A digital asset that operates without banks, without governments, without central control, and still manages to survive, grow, and dominate an entire financial industry. That asset is Bitcoin. And even after more than a decade of explosive cycles, crashes, recoveries, and global debates, one question still refuses to go away. Is Bitcoin already at its peak, or is the biggest phase of its growth still ahead of it? To understand that, we need to go much deeper than price charts and hype cycles. We need to understand the system behind Bitcoin, the psychology of adoption, and the global forces shaping its future. Bitcoin is the world's first decentralized cryptocurrency, created in 2009 by the unknown entity Satoshi Nakamoto. Its purpose was simple but revolutionary: to create a form of money that does not depend on any central authority. Unlike traditional financial systems controlled by central banks and governments, Bitcoin operates on blockchain technology, which records transactions in a transparent and immutable way across a distributed network. Over time, Bitcoin has transformed from a niche internet experiment into a globally recognized financial asset. Today, it is treated as digital gold, a store of value, and in some cases even a hedge against inflation and currency devaluation. Institutional investors, hedge funds, public companies, and even governments are now paying attention to Bitcoin as part of the new financial landscape. In this video, we will break down Bitcoin's core fundamentals, long-term value drivers, risks, adoption trends, and future potential to understand whether it still has massive upside left in the coming years. Before we continue, if you enjoy deep financial and crypto analysis like this, make sure to like the video, subscribe to the channel, and turn on notifications so you never miss future insights. 1. Bitcoin is the first true financial disruption. Bitcoin did not just create a new asset class, it created a completely new financial system concept. For the first time in history, money could exist without a central authority. No bank approval is required, no government permission is needed, and no institution controls supply or transactions. This concept of decentralization introduced a new level of financial freedom that was not possible in traditional systems. Bitcoin essentially challenged the foundation of modern banking and forced the world to rethink what money actually is in the digital age. 2. Fixed supply and mathematical scarcity. One of Bitcoin's strongest fundamentals is its fixed supply of 21 million coins. This means no matter how much demand increases in the future, the total supply will never change. This creates a mathematically enforced scarcity that is completely different from traditional fiat currencies, which can be printed infinitely by central banks. This scarcity is one of the main reasons Bitcoin is often compared to gold, but in a digital form that is easier to transfer, store, and divide. 3. Bitcoin is a global store of value narrative. Over time, Bitcoin has evolved from a payment experiment into a store of value asset. Investors do not primarily use Bitcoin for daily transactions anymore. Instead, they hold it as a long-term asset similar to gold or real estate. The idea is simple: protect wealth from inflation, currency debasement, and financial instability. In countries experiencing economic uncertainty, Bitcoin adoption tends to increase as people look for alternative ways to preserve purchasing power. 4. Institutional adoption. Changing the market structure. In the early years, Bitcoin was mostly driven by retail investors and online communities. Today, the landscape is completely different. Large financial institutions, hedge funds, asset managers, and even publicly traded companies have started holding Bitcoin as part of their investment strategy. This shift has added legitimacy, liquidity, and long-term stability to the market. Institutional involvement also means Bitcoin is no longer a fringe asset. It is now part of mainstream financial discussions. 5. Bitcoin halving and supply shock mechanism. Bitcoin follows a unique monetary policy called halving. Approximately every 4 years, the reward for mining new Bitcoin is cut in half. This reduces the rate at which new coins enter circulation, effectively tightening supply over time. Historically, these halving events have played a major role in Bitcoin's long-term price cycles, often followed by increased demand and market expansion. This predictable supply reduction makes Bitcoin fundamentally different from traditional financial assets. 6. Global adoption and real-world integration. Bitcoin is gradually becoming integrated into global financial systems. Some countries have adopted it as legal tender, while others regulate it as a financial asset. Payment platforms, fintech companies, and investment services are increasingly offering Bitcoin-related products. This growing integration is slowly shifting Bitcoin from a speculative asset into a globally recognized financial instrument. However, adoption is still in early stages compared to traditional money systems, which means there is still room for expansion. 7. Extreme volatility and investor psychology. One of the most defining characteristics of Bitcoin is its volatility. The price can rise or fall dramatically within short periods of time, often driven by market sentiment, global news, liquidity changes, and investor psychology. This volatility creates both opportunity and risk. Traders benefit from price swings, while long-term investors must be prepared for emotional pressure during market cycles. Understanding this psychological aspect is essential for anyone entering Bitcoin investment. 8. Regulatory pressure and government response. Governments around the world are still figuring out how to regulate Bitcoin. Some countries support innovation and adoption, while others impose strict restrictions or uncertainty around its legal status. Regulation is one of the most important long-term factors affecting Bitcoin's future, as it can influence taxation, usage, exchange operations, and institutional participation. Despite this uncertainty, Bitcoin continues to operate globally without needing centralized permission, which is one of its strongest features. 9. Competition from altcoins and blockchain innovation. Bitcoin is the first and most dominant cryptocurrency, but it is not the only one. Thousands of other cryptocurrencies exist, offering features like smart contracts, faster transactions, and decentralized applications. However, Bitcoin's strength is not technological superiority in every area, but trust, security, and brand dominance. It remains the most recognized and widely held cryptocurrency in the world, often acting as the benchmark for the entire crypto market. 10. Long-term digital asset evolution. The most important long-term argument for Bitcoin is its evolution into a global digital asset class. As the world becomes more digital, decentralized, and connected, demand for alternative financial systems continues to grow. Bitcoin sits at the center of this transformation as a borderless, permissionless, and scarce digital asset. Whether it becomes a global reserve asset or remains a store of value, its role in the future financial system is still evolving and expanding. If you found this analysis valuable, make sure to like this video and subscribe to the channel for more deep crypto and stock market breakdowns. Comment below and tell your opinion. Do you think Bitcoin will eventually become global digital gold, or will competition and regulation slow its growth? Your thoughts matter, and I read every comment. Thanks for watching, and I'll see you in the next video.